stock of the day. Thought we'd take a look at Macquarie. Haven't looked at Macquarie for a little while. The big four banks come up pretty regularly. Morgan Stanley's analyst, Andrew Stadnick, says the firm is going overweight on Macquarie Bank with a price target of $215 while expecting a subdued first quarter 24 AGM update as several large asset sales are offsetting soft commodity and capital market slower mortgage growth. He says Macquarie is well placed to deliver upgrades as this financial year unfolds, given improving outlook for key drivers. Michael, a really bullish sort of forecast on Macquarie Bank. Do you agree with Morgan Stanley?
Yes, so Macquarie is one we actually added to our managed fund a few weeks ago, around the 175, 180 mark.
Yep.
So, look, we're not expecting it to take off in the short term. As you can see from the chart there, it's been range bound for some time, but we do think that the last 12 months for Macquarie have been challenging. You've had obviously subdued capital markets. Even in the first half of this year, the commodities business has quietened down a lot with a lot less volatility in a lot of those core commodities as well as energy. However, on an improving outlook, looking out sort of FY 2024 and calendar year 2024, we think there's potential for Macquarie to start to resume a bit of an upward swing as some of those key business divisions, the outlook improves for them. Again, such as your capital markets, your trading business, your asset management business. Yep. We think there's prospects for those businesses to really start to be net contributors again to Macquarie's earnings on a broader scale than they have been in recent years. So we're optimistic on the outlook for Macquarie long term. But
so
in the short term,
you're buying around the 180?
Yeah. So in the short term, we're not expecting a huge amount, but on a more medium to longer term view, we're happy to buy Macquarie.
Okay. All right. Carl, what do you think of Macquarie? Oh, are you on mute there?
Sorry, Goshi.
Yep.
Not sure how that happened, but look, I was just about to say, I'm a little bit ho-hum on Macquarie. I said at the start, I'm a bull in a bull market, and Macquarie does well in bull markets. So on that basis, I can see why you might start looking at it around now. Interesting, you mentioned this research notes come from Morgan Stanley. Now, they reported their quarterly earnings last night with a big beat. They were up 6%. Similar businesses in many ways. Goldman Sachs also rallying really well. JP Morgan also rallying really well. So we are seeing some of these sort of asset managers, financial services businesses in the US start to do well. A lot of Macquarie's business is in the US. So look, I can see sort of more tailwinds than headwinds on the basis that I think equity markets, risk markets are going to be fairly buoyant over the next 12 to 18 months. And nobody knows the future, of course. The valuation is about fair. I mean, literally trading on a PE of 14, which is about the 5-year historical average. So nothing to see there. The chart is looking okay. It's looking quite fair. Plenty of support around that 170 to 165 level. As long as it stays above that, I think people who own Macquarie can certainly hold it. As for buying it, look, I'm a momentum buyer. I mean, you can see in the chart there, that's a great chart, actually. We'll leave that chart on screen. You can just see how flat it's been over the last 18 months. So I haven't seen a great deal of reason to be in Macquarie. If it starts to break above 195, I can certainly start to see the momentum coming back in. But until then, I'm happy holding.
Okay, all right. But let's keep that chart up there. You're saying the last 2 years range bound, but between sort of 160 and 2...
No, 150.
150 and 211. That's $60 on a $180 stock. If you got your timing right, you made 30%.
Yes, if you got your timing right, and you have to.
Well, you're the king of the timing, Carl.
Look, I'm pretty good at it, and if that's what you're trying to do, I recommend learning more about Japanese candlesticks, right? Because they are your short-term pinpoint sniper rifle technical analysis tools to tell you when something's turning off the top of the draw the bottom.
All right, so for those people, when I hear you say Japanese candlesticks, you're not talking about buying shares in dusk. Tell us what a Japanese candle is different to a white and a black candle.
You're on the right track. So it's a way to represent the daily price range. So probably on your ThinkMarkets platform or your ComSec platform or whatever you got, you might be using bars. It's just a line.
Yeah.
What so what the candlestick does is it incorporates the opening price, the closing price, plus the high and low range as well. And then we're going to colour the range between the open and the close, either white if the close is above the open, or black if the close is below the open.
Right.
Basically, look.
Where does the Japanese one come in?
Well, this idea, this concept was developed back in the late 1700s by a rice trader named Monohushu Homa, who, as the legend goes, became the richest man in the world, Koshi, using his methodology to trade rice futures.
Wow.
So you could say it is a tried and true method. I love them. You've seen my charts on Twitter. This is all I do.
Yeah. So a Japanese candles is the collective noun, if you like, for all the candles, is it? Right.
Exactly.
Okay. Well, there you go. I'm glad I went there. Love a bit of trivia like that. So just a hold for you. So,
I think it's a hold. Look, I want to see some momentum come in. I think it could do in a bull market, but let's see the chart pick up first.
Okay. All right.